The ruble does not give up vertical bar. What is the Russian central bank doing vertical bar? Where to invest? Hello viewers, welcome to my YouTube channel. Today in this video, we will talk about that. What is the Russian central bank doing? The Russian central bank has purchased millions of rubles to prevent the collapse of the Moscow Stock Exchange and prop up the currency after it plunged to an all-time low of 89.60 against the dollar. In a scramble to prevent the invasion of Ukraine pushing Russia's financial system into meltdown, officials in Moscow closed the stock exchange while the Bank of Russia mounted a rescue operation to put a floor under the skidding ruble. By midday, the stock market had reopened and the ruble recovered to trade at 84 to the dollar, though late in the day it climbed back to 87, and analysts said an escalation of the war could force the central bank to intervene further to prevent the currency sinking even lower. To stabilize the situation on the financial market, the Bank of Russia decided to start interventions on the currency market, the central bank said. Russia's main stock exchange fell 30% after reopening, falling from 3,000 to 2,000 points, while the MSCI index of shares in Russian companies traded in London and New York dropped by 45%. Kremlin spokesperson Dmitry Peskov said Russia had created a financial safety net to withstand market volatility and said the emotional reaction of the financial markets to Russia's invasion of Ukraine would even out. He added that all necessary measures were being taken to ensure the market reaction was as brief as possible. After weeks of denying plans to attack Ukraine, Russian forces fired missiles at several Ukrainian cities and landed troops on its coast, prompting analysts to predict that severe pressure on global financial markets was likely to persist over the coming weeks. Russia's currency, bonds, and stocks all sank before its central bank announced its first foreign exchange intervention to shore up financial stability since 2014, when the country annexed Crimea from Ukraine. Russia holds a formidable war chest of more than $600 billion, 450 billion pounds in foreign exchange reserves, and gold that it can use in currency markets to prop up the ruble. A rapidly depreciating currency makes it harder to pay off foreign debts and leads to higher prices on imported goods and lower returns on exports. Officials at the Bank of Russia are understood to have sold foreign reserves to buy rubles to put a floor under the price, though the extent of the buying operation is not yet clear. One of the biggest falls in the value of the ruble was against the euro. Before the recent round of geopolitical tensions between Moscow and the West began to escalate in October, the ruble was trading at around 80 to the euro. It is now heading towards 90. Susanna Streeter, senior investment and markets analyst at stockbroker Hargreaves Lansdowne, said market volatility has increased since the beginning of the year, stoked by rising interest rates, and today's news has added fuel to the market turbulence. As the U.S. said it may cut off Russia's top banks from dollar transactions if Moscow moves its troops into Ukraine, data showed in December that Russian banks brought $5 billion in foreign exchange back to Moscow and moved some of their long-term foreign exchange holdings into more liquid assets if needed in an emergency. To support Russian commercial banks under pressure from falling share prices and Western sanctions, the central bank increased the daily amount of rubles it would swap for dollars from $3 billion to $5 billion. This will allow commercial banks to replenish the dollar stocks needed to repay foreign debts. The Bank of Russia also expanded the list of securities it accepts as collateral in exchange for the liquidity it provides. Markets are now bracing for the impact of fresh harsh Western sanctions to punish Moscow for the invasion of Ukraine. The sanctions hit is going to be significant, unlike the soft sanctions imposed on Tuesday and Wednesday, said the investment firm Renaissance Capital. The effective interest rate on Russian government debts soared to almost 10% as bond investors sold heavily to seek safer havens, although the effect is expected to be limited as most of the debt is held by domestic financial institutions. Ukraine's government debt collapsed in value, pushing the country towards a further bailout by the International Monetary Fund. The Washington-based lender of last resort said this week it was poised to start a virtual mission to Ukraine with a view to releasing $700 million in aid. Since 2014, the IMF has committed more than $20 billion in loans to Ukraine in a series of bailouts, though in 2019 it demanded that Volodymyr Zelensky's government show it would aggressively try to recoup an estimated $15 billion that was stolen from more than 100 banks, including the country's largest private bank, over the previous decade before a further $4 billion was released. The Russian central bank is expected to ease pressure on the ruble further by increasing its main interest rate, which it hopes will lure back foreign investors searching for high returns. The bank is also expected to continue monetary tightening by raising interest rates as it struggles to rein in inflation, which is set to worsen from the falling ruble. Risks of strong ruble. But the currency's official appreciation comes with risks. It makes selling commodities abroad for foreign currency less profitable since the revenues Russia ultimately gets from such exports are mostly ruble denominated. That could put pressure on the already crisis-stricken budget at a time when Russia is cut off from global capital markets and has raised lending rates sharply. Further firming in the ruble will tear the budget apart, said Evgeny Suvorov, economist at Central Credit Bank, adding that ruble gains could deprive the budget of funds needed to support companies, banks, and households. In a sign that authorities are concerned about the ruble appreciation, something that surprised many experts, Finance Minister Anonsilu Onov said that his ministry and the central bank were aiming to make the ruble more predictable. Market volatility has spiked in recent weeks. The supply-demand balance was disrupted as authorities, seeking to cap losses in the ruble, obliged export-focused companies to convert 80% of their FX revenue into rubles, which became the main driving power for the once free-floating currency. At the same time, demand for FX was artificially suppressed. Russia banned cash purchases of dollars and euros, introduced a 12% commission on buying foreign currency online, and set the maximum amount that an individual could withdraw from their bank account at $10,000 until September 9. People grew cold towards Forex due to commissions and restrictions on its withdrawal from the country, said Maxim Baryukov, senior analyst at Alpha Capital Brokerage. The finance ministry told Reuters that the recent sharp strengthening impacted oil and gas revenues but did not pose a risk to Russia's fiscal policy. The central bank did not reply to Reuters' request for comment on the ruble rate. Inflation issue. In theory, a stronger ruble could help rein in inflation that is on track to spike to 24%, its highest since 1999, according to analysts polled by Reuters. The central bank targets 4%. But consumer prices keep on rising due to disruptions to imports and a lack of foreign components, said Gazprom Bank economist Pavel Baryukov, who forecasts annual inflation at 27% in mid-2022. Despite remarkable ruble gains on the Moscow exchange, banks are offering to sell dollars and euros at different rates. On Friday, the largest lender, Sberbank, was selling dollars and euros online for 79.8 and 85.1 rubles, respectively, compared to an official rate of 76.25 and 83.29. Some exchange offices are still selling cash Forex for rubles despite the official ban, but at a different price. Within a short walking distance of the Kremlin, an exchange office behind an unmarked door offered to sell cash dollars for 93 rubles and euros for 103 rubles on Thursday. A man behind bulletproof glass in the office explained the gap between its prices and the ruble rate on the Moscow exchange by the need to make some money. Russia's tourism industry also has a different exchange rates for those with enough money to holiday abroad. The euro-ruble conversion rate to buy trips to Turkey was at 85.5 on Friday, according to a Rouble travel agency in Moscow. So this was our today's video. I hope you all liked this video. Don't forget to hit the like button and subscribe my channel. And also share it with your friends and family. We will be back soon with a new video. Till then, keep supporting and take care.